Hey, and we are live on Facebook, making sure everything is working. Bam, bam. Let's quickly check a look here. Let me know if you can hear me and see me in the chat. Go ahead and comment something. Let's see. Let's see. We are live so far. I do see that. Let me know if you can hear me or see me in the chat. All right, perfect. Meanwhile, let me pull this up. All right, so Facebook, welcome to our first live stream. I'm really excited. Welcome to the tax reduction strategies for money-making entrepreneurs. That is exactly what we're going to be talking about. One of the strategies that we are going to be talking about is having multiple businesses in multiple S corporations. Is it a mistake or is it not a mistake? What are we going to do about that? Let me quickly take a look. What is going on here? Yeah, perfect. Bam. All right. All right. Awesome. Ladies and gentlemen, welcome to today's live. Right. Welcome, first of all, to our Facebook group. I'm very excited that I've launched this Facebook group. This is our first official live thing we launched last week, and we're already at 750 members. I think by the end of the month, we'll probably have 2,000 members if all goes well. We'll continue expanding and bringing in more people, providing more value. But today, we're going to talk about multiple businesses and multiple S corporations, and is it a mistake? Right? So before we continue with this strategy or really looking at your multiple businesses, right? Let's kind of talk about this, right? Let's talk about this little guy versus big guy thing. Now, in my business, right, in tax planning world, I've seen, when I say little guy, let's just focus on somebody's taxable income is a couple $100,000 versus the big guy whose taxable income is $10 million. They both make the same mistake, right? Just because you're a small business owner and you're making a few $100,000, even $500,000 or even $200,000, doesn't mean that the mistakes that you're making in your business, just because you don't know about them, are not the mistakes that the big guys are making who are in multi-million-dollar figures, right? We've got plenty of clients who are in that area, and we've got clients who are actually going to go to, or planning, I should say, go public, and because they had their entities structured incorrectly, that kind of delays them, and we're restructuring that, and they're the big guys in this scenario, right? And they make exact same mistake as you would be making when it comes to structuring your businesses, structuring your S corporations, right? Now, by default, a lot of people think that the S corporation is the best way to go, and that is correct, right? In most cases, generally, yes, I advocate for it. You guys, some of you on this call might already have my book on S corporations, right? And that is the way to go, generally, for your main business, for your main operating business. But when you got multiple businesses and you start putting everything into S corporations because you mysteriously heard that S corporations is the best entity, when you've got multiple entities, that could become a problem, right? And again, if you're a little guy, you think you have a small business, which is going to become big soon, right? Few $100,000 in taxable income versus somebody who's making a few $1 million, same situation, right? Same strategies. You just have to know what you're doing, and you need to know the tax law, right? Now, one of the first problems in having multiple S corporations, having multiple businesses in multiple S corporations is that multiple S corporations pay multiple Social Security taxes on owner's salary, right? First of all, understand that. Now, what does that mean? So in America, right, in the United States, we've got different kinds of taxes: federal tax, state income tax, federal income taxes, state income taxes, and we have what's called payroll taxes. That payroll tax is Social Security and Medicare. Now, if you have a job, assume you're not a business owner, right, and you're working for somebody, you're going to stop paying the Social Security tax when you reach $147,000. That is with the new thresholds. You're going to stop paying that tax. Your employer is going to also stop paying that tax at $147,000. Now imagine if you have multiple jobs and each job is paying you $147,000, $147,000, and $147,000. You're going to pay as an individual Social Security taxes on salary from all these jobs, but your max is only $147,000. That's okay. You're going to get a refund back on your taxes for overpaying Social Security. You're with me so far, right? But those employers that you work with, nobody's getting no refund over there. Each one of them will pay their portion of payroll taxes. So when you have your own multiple businesses running, and now because you're an S corporation in each of these multiple businesses, you now have to pay yourself a reasonable compensation from different S corporations. And if you maxed out your salary over $147,000 from all the S corps, you're going to get back refund personally for Social Security taxes that you overpaid. But the businesses that you own are not getting back that 6.2%. Think about that. For every $100,000 that you pay yourself over the $147,000, that's $6,200, right? That is the first thing. Now you have to worry about having a reasonable compensation from each S corporation and so forth, right? So that is the first kind of, on a low end, the most basic mistake that you could be doing when you have multiple S corporations. You're facing a lot of compliance. With an S corporation, we've got to go through compliances, right? It's a corporation, for crying out loud, right? Got to have a reasonable compensation. There's no fringe benefits. If you own more than 2% of shares of your S corporation, right, the fringe benefits are in a C corporation, not here, right? So when you've got those things going on, you're definitely hurting yourself. So first things first, you've got a main business going on. Great. Is it your main operating business? Awesome. Is this your cash cow business? Meaning to say, is that generating cash for you? Is this the income that you're living off? Awesome. Keep it in the S corporation. You've got a second business. Well, this brings us to our next slide over here. You need to define the purpose of your business entity. What do I mean by that? This is super, super important. Remember that slide I showed you? This tea is good. Remember that slide I showed you, little guy versus the big guy, right? Here's the thing, the big guys that we're referring to in this video are multi-million-dollar companies, which we have clients of, right, in that space. Now, they have multiple businesses, but they fail to define the purpose of that entity. What do I mean by that? We obviously know, well, the purpose is to produce this and sell this item. The purpose is to have this service and do this, right? We know the business purpose, so to speak, but what is the purpose of this entity for you, right? What is the goal of this entity? Are you looking to exit this entity? I've got clients who have their main operating business, S corporation, right? And now they started investing in other businesses, forming other businesses, startups, app companies, right? They're starting this kind of app going on. What is the purpose of that business, right? And we have few clients in that space, actually. Well, the purpose, Boris, is really to grow it and I can sell it. Oh, so the purpose is to exit the business, right? So when the purpose, especially when it comes to exiting the business in the future, there are so many opportunities that are available for you to do that. S corporation is not one of them. Remember, you want to have, if you've got different businesses, your main operating business should be in the S corporation. That is where you're taking advantage of your reasonable comp, health insurance strategies for the owner, 401k, any other things that you can do to maximize your tax savings, right? Because we want to put as many deductions as possible in the S corporation. Why? Because that is a pass-through entity. It's going on your personal income tax return, which is taxed at the highest rate, which is the ordinary income tax rate. Then we've got different entities. What is the purpose of those entities? Boris, we're going to use the money from that entity to accumulate cash, and then we want to start investing in real estate in different entities. Oh, great. Can be an S corp, right? You follow me so far? You have to identify the purpose of that entity. If the purpose is to sell, perfect. There's such favorable IRS codes and regulations for companies that are looking to sell their businesses, right? They encourage startups to grow their businesses and to sell it. And that sale could be tax-free to you. Under current law as it stands, you can sell up to $10 million of your C corporation stock, 1242, qualified small business stock, and don't pay any tax on the gain of that. There's certain criteria and qualifications you have to meet. Definitely advise you to get a tax planner. We already know what that is, being in this group, right? And then you can meet that. Now, the current law under the Build Back Better, which is a conversation for another day, is looking to change that limitation from 10 million to 5 million, but that's still kind of work in progress because Build Back Better hasn't passed yet, thanks to Joe Manchin. No, we're not going to talk politics. But anyway, so really defining the purpose of your business entity, ladies and gentlemen. All right, so that is important, okay? Now, Should we keep real estate rentals in our S corporation? Why? Why would you want to keep real estate rentals in S corporations? I want you to understand something. The purpose of the S corporation is to avoid self-employment tax legally by paying yourself a reasonable legal compensation, right? So we've got a lot of income. We don't want to be a C corporation. We don't want to be subject to double taxation. Great. We're going to form an S corporation, take out a reasonable compensation. So this way we pay our fair share of the Social Security taxes. The rest of the profits in the S corporation are not subject to Social Security Medicare taxes. Great. So when you put real estate in the S corporation, the income from the real estate rentals are by default passive. Passive income is not subject to, or really the rental income. Forget the fact that it's passive, because you could be a real estate professional and turn that passive into not passive, but the income from the rentals is not subject to Social Security Medicare taxes. There is no reason why you should do an S corp. And if you do, you have to start dealing again with the compliance of a reasonable compensation and so forth. So don't keep the real estate rentals in the S corporation. So coming back to our topic, multiple entities and multiple S corporations is a mistake. In most cases, it is, right? We first have to define, do we have a main business? Our cash cow business, as I like to call it, right? We want to make sure we use this business, put as many deductions under this business, because that is going to be a deduction for our personal income taxes. Perfect. We've got other entities. We've got rentals. Great. Can we strategize to put those rentals in a separate LLCs? Yes, we can. Can we have a holding company? Yes, we can. Can we pass that income from those rental LLCs to our personal? Yes, we can, but it's not an S corp. Can we have a management company to take care of those rentals? Yes, we can, depending on your situation, but it shouldn't be in the S corporation. All right. I hope this is helpful. If you have any questions, drop it in the comments below. Now, the power of limited liability companies, right? What is the limited liability company? It's an LLC, right? Simple terms, it's an LLC. Let me just kind of give you a little bit of a background. What does that mean? Forming a corporation or an entity in the United States. Let me just take my tea. So good. All right. Earl Grey, by the way, nothing fancy. Not a fancy guy. I only get fancy with taxes. But the power of limited liability companies. Let's take a step back for a second, right? When somebody forms an entity in the United States, let's say you form a corporation, just you go do however you form it, right? You form a corporation. You are by default a C corporation. Done. You're a C corporation, and if you want to be an S corp, you have to file a separate S corporation, a separate form 2553, to be elected as an S corporation, right? By default, from C, you can only go to an S. Done, right? Now, the power of limited liability companies is that if you form an LLC, let's assume you're one owner, right? There's no partners. You are by default a disregarded entity. That means just like sole proprietors file their taxes, that's what you are. Even though you have a legal entity and you've got an EIN, this is really for liability protection. Now you have a business entity, right? Now the power of limited liability companies is huge, because LLCs, within an LLC, you can choose how do you want to be taxed, right? You can choose to be taxed as an S corporation. You can choose to be taxed as a partnership, right? A flow through income by the partnership to its partners, or you can be taxed as a C corporation. Now, why am I even bringing it up in our topic, multiple entities and multiple S corps? Because when you start forming companies, right, generally, using LLCs would be best, right? I always say consult with your attorney or your tax professional when it comes to doing that, especially with your tax professional for the tax consequences. But let's say you've got formed few companies, you've got an S corp, our cash cow, right? Main operating business. We're using all the strategies, most of the deductions. Now you want to start a few other companies. You don't know the future of these companies, what it's going to do, how much income it's going to hit. Is it going to have VCs, right? Venture capitalists or other investors? What you want to do, right? What you want to do is form LLC for them, but don't make an S corp election. Why in the world would you even do that? Especially if it's a startup where it's going to have a loss and expenses. I've come across many people who have been in that situation, and that would not be the best way to go about it. Because now if you got an LLC, now let's say the business startup or whatever it is kicked off, you want to bring in venture capitalists, or you don't want to bring in venture capitalists. You just want to be on your own. This is like, all right, Boris, this is what we need to do. You strategize, you come up with a tax plan. This is what the purpose of this company, right? We have defined the purpose of this company, and now we're going to strategize this entity, and we can convert the LLC for tax purposes into its appropriate entity, whatever it needs to be, whether it's a holding company, a rental real estate holding company, a holding company that invests, right? What if you're invested and invest in different startups? Great, you can have it for that purpose, right? You can convert that, have a partnership, have your children, right? In there, or you can have as a C corporation or an S corporation if we have to, right? In some cases, maybe S corporations could be an option. Having more than one S corporation, right, could be an option. So that is the power of LLCs. Ladies and gentlemen, I always say, right, if you have a tax preparer, you do not have a tax planner, right? Because when it comes to tax planning, right, you have to think of it this way. We've got a tax planning versus tax preparation. Preparation, the year is over. There's nothing else you can do. You cannot go back, undo your S Corp, undo your entities, undo your salaries, undo. Most cases you can't. That's why it's important for you to tax plan, okay? If you got a tax preparer, you do not have a tax planner. Sit down with your tax planner, right? Sit down and figure out what is going on, right? Look at your life, look at your business, look at your taxes. I'll be honest with you, this is exactly what I'm doing for myself right now. My wife is watching on this live and she'll agree with you, right? So I live in New York and we have an office, a company, our headquarters are in New York City. So New York City doesn't recognize pass-through entities, S corporations. So I pay double tax in New York, right? I'm being taxed twice on my regular income and a corporate income. A corporate income for New York City tax of 9%. I was like, there's got to be a better way probably, right? So I started researching and I found out that I know very little about New York City taxation. Now, most of our clients are not in New York City. I think 98 or 7% of our clients are outside of New York City or New York really, right? So we are a virtual firm doing tax planning for all over the country. So I contacted New York State, New York City tax attorneys for my tax planning for New York City. And I have discovered that there's tax planning opportunities that I can do for my corp in New York City where I don't have to pay taxes on the income that the corporation is earning with using different New York City legal laws. Now, why am I telling this to you? Because I am doing exactly what I'm telling you you should be doing, tax planning. Right? That is extremely, extremely important. You want to reduce the amount of money you're paying on taxes, you need tax planning for yourself. Now, if you are interested in tax planning, you want to learn more about what tax planning can do for you or how much you can save money on taxes, go ahead and comment I'm next and somebody from my team will reach out to you. When you're watching this video, go ahead and comment, hey, I'm next, and somebody from my team will reach out to you and see what we can do for you and how tax planning can work for you. Hey, Boris Mashev here. Thank you so much for watching the video. Look, if you like what you saw and you like to see more of this, go ahead and subscribe below because every time when we're going to release a new tax strategy video, you will be notified. And it's an amazing content, and we hope you enjoy it. Now, I don't know why I'm talking about content, but anyways, first of all, go ahead and hit the subscribe button. Number 2, go ahead and like this video if you really do like it. And number 3, the most important thing, I'd like you to comment below. Any questions that you have about what you just saw or anything that you would like to learn in particular, I will personally review those comments and will make content based on those comments for my viewers. Thank you so much. Till the next time.